Is Nancy Pelosi make money just because of insider information? Not really. Her real age lies in her investment and the trading psychology. What can ordinary investors actually learn from it? In this video, I will break it all down for you. A lot of people say Nancy Pelosi, profits from insider trading. But today I'm going to show you a truth most people completely miss. A real weapon is not inside information, but a deeply ingrained, counter instinctive decision system. This system has helped her navigate decades of politics and handle multiple market cycles while also capturing some of the major trends of her time. I'm Andy, a clinical psychologist. Today, I will break down the underlying logic behind Nancy Pelosi's 40-year political career and her long-term investment behavior, and explain why she's able to stay less impulsive, keep optionality, and survive for the long run. Pelosi first entered Congress. Her family's investment portfolio was in relative small and mainly focused on large blue chip companies like banks and telecom firms. By 2025, her family's net worth had grown to hundreds of millions of dollars. What's more interesting is that her portfolio shifts have at a certain time aligned with the major technical and the market trends. This is not purely luck. It looks more like a defensive decision-making style applied constantly over time. Next, I'm going to walk you through 7 counter-instinctive traits that she carried from the political arena into the market. Each one directly hits the core mistakes the most retail investors make. The first trait is patience and restraint, the ability to wait and not act prematurely. In politics, Pelosi is known as a highly strategic operator. After the Democratic Party lost control of the House in the 2010 midterm elections, she faced internal challenges, but instead of reacting emotionally, she continued working behind the scenes, organizing fundraising and rebuilding. Years later, in 2018, Democrats regained the control of the House and she became Speaker again. This kind of patience also shows up in her trading behavior. During the progression of the Chips and Science Act in 2022, the semiconductor sector was getting a lot of attention, but public disclosures shows that her family did not build a major NVIDIA position before the bill passed. In fact, they had previously accepted related option positions in June 2022. Later, as the AI trend became clear after 2023, her family re-entered exposure to companies like NVIDIA through options. Real professionals often do not go all in during the most uncertain and chaotic phases. They tend to wait until the trend becomes clear before participating. So the second trait is high sensitivity to risk, always preparing for downside. Throughout her political career, she has emphasized the strategy and the flexibility when healthcare reform was passed in 2009, the process involved multiple steps, negotiations, and adjustments rather than a single decisive move. A similar mindset appears in her investment behavior. Recent disclosure shows that after certain tech stocks rise, her families may reduce equity exposures while still maintaining upside through options. This is a classic keep a backup plan approach, lock in some profits while using a smaller amount of capital to stay exposures to future upside. And the third trade is not following the crowd, focusing dominating players in both politicals and invaders. Her approach appears more strategy driving than emotionally driven. Her family's holdings are often concentrated in large cap technology leaders like Apple, Nvidia, Amazon, and Google. Instead of chasing small, speculative names, this approach focuses on higher probabilities assets. In financial markets, following the crowd often means taking on higher uncertainty, while concentrating on the dominant players is another form of risk control. The fourth trait is big picture thinking, focusing on long-term trends. Pelosi has been involved in policies related to infrastructure, technology, and industries. In visiting, her family has also held companies like Visa for many years. Her decisions are not purely based on short-term price movement, but more aligned with larger industry trends such as digital payments, technology, and AI. The fifth trait is, in fact, it's risk. First, return. Second, many people assume her strategy is aggressive, but based on the disclosures, her structure often includes growth assets like technology, more stable assets such as financials or income generating companies. For example, while adjusting some take positions, her family has also held asset management firms and other relatively stable business. This kind of allocation is closer to balancing risk and return rather than maximizing short-term gains. And the sixth trait is discipline, but not perfect timing. Public record shows both successful trades and imperfect ones, including early exits or losses. They suggest she is not perfectly timing the market every time, but rather adjusting positions across different phases. And the seventh trait is emotional stability, or an inferior characteristic. In politics, she has operated under long-term pressure and shown a relatively steady public demeanor. In trading, her family's actions tend to be structured and incremental rather than driven by one-off emotional decisions. This does not prove her internal emotions, but behaviorally, it looks more rule-based than impulse-driven. At this point, some of you may say, Andy, she has access to information we don't. That's true. We don't have the same information channels, but some of her behavior, patterns, and strategic thinking are still worth learning from. Here are 3 things you can apply immediately. First, build a waiting mechanism when you want to buy a stock. wait for 3 days. If you still want to buy it after 3 days, then act. Second, keep cash reserves. Avoid going all in. Always leave room uncertainty. And third is not to accept missing out. In market, missing opportunity is normal. Trying to catch everything often leads to impulsive decisions. In the end, her results can be understood as the outcome of long-term behavior pattern. At the highest level, investing is not just about skill or information, but about managing emotions and managing risk. If you ever lost money because of impulsive trade or struggled with chasing highs and selling lows, comment below. Subscribe to the channel. In the next video, I will break down more trading psychology. I'll see you next time.